The possibility of a housing market crash in 2023 has become a worrisome topic for many Americans. A market crash, also known as a housing bubble burst, can have far-reaching consequences, including economic downturn and instability. In this video, we will delve into the main points of an article that highlights the key factors contributing to this concern and the potential implications for homeowners and buyers. By understanding these factors, we can better navigate the housing market landscape and make informed decisions. Rising home prices outpacing income and inflation. One of the critical factors contributing to concerns about a housing market crash is the trend of home prices rising faster than income, or inflation. When home prices outpace people's earnings, it becomes increasingly challenging for individuals and families to afford homeownership. This affordability gap can lead to a decline in housing demand and put downward pressure on the market. We need to closely monitor the relationship between home prices, income levels, and inflation rates. It is essential to assess whether the current trajectory is sustainable or if it might contribute to a potential market correction in the near future. Low availability of affordable housing. Another worrisome factor is the low availability of affordable housing. Many markets across the country are experiencing a shortage of homes for sale, particularly those that are within an affordable price range for the average buyer. This scarcity of affordable options leads to increased competition among buyers and drives up prices, further exacerbating the affordability crisis. It is important to address this issue through various means, such as increasing housing supply, implementing policies that promote affordable housing development, and supporting initiatives that help low-income individuals and families access homeownership. High rates of subprime mortgages and predatory lending. A significant concern contributing to the potential housing market crash is the prevalence of subprime mortgages and predatory lending practices. These practices involve providing mortgages to borrowers with low creditworthiness or imposing unfair terms and conditions that can lead to financial distress and foreclosures. Effective regulation and oversight to curb predatory lending practices and ensure that borrowers are not being exploited. It is crucial for buyers to carefully review loan terms and seek professional advice to avoid falling victim to such practices. High mortgage rates. The impact of high mortgage rates cannot be overlooked when assessing the potential risks of a housing market crash. Rising interest rates can make it more challenging for buyers to afford homes, reducing their purchasing power and potentially dampening housing demand. Prospective buyers closely monitor mortgage rate trends and be prepared to adapt their buying plans based on market conditions. It is advisable to consult with mortgage professionals to explore options and find the most favorable rates available. Low home inventory, in general. Lastly, the overall low inventory of homes for sale is a significant factor contributing to concerns about a housing market crash. The scarcity of available properties, coupled with high demand, has created a competitive market environment that favors sellers. This imbalance between supply and demand drives up prices, potentially creating a market bubble. Potential buyers to be patient and proactive in their search for a home. It is advisable to work with experienced real estate agents who can provide insights into off-market listings and alternative buying strategies. The possibility of a housing market crash in 2023 is a concern that requires careful consideration. Rising home prices, low availability of affordable housing, high rates of subprime mortgages, predatory lending practices, high mortgage rates, and low home inventory are key factors that contribute to this concern. By staying informed and being proactive, homeowners and buyers can navigate the market landscape with confidence. Seeking professional advice, monitoring market trends, and understanding the dynamics of the housing market will help individuals make informed decisions and protect their investments in the face of potential market challenges.